Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Today we're going to do a market update for the Las Vegas real estate market for December of 2021.
Yes.
We do these every month, and what's interesting about them is we use the same data every month. It comes from Altos Research. We get it from a title company. So it's pretty accurate data, and it's got a lot of cool things in here that we like to talk about.
Absolutely does.
Okay, so we're going to jump right into the first slide here, Market Action Index. This measures how hot a market is. When we were doing this in the spring, it was like 80. It was a pretty hot market, seller's market. It's at 62.
Right. Last month it was 63, so not a whole lot of change there.
That's the same. That's actually pretty interesting because usually the market drops this time of year, right? November, December, the market kind of there's not a lot of movement.
No, there's not a lot of movement because most of us don't want showings of our homes over the holidays. We have family coming, we're decorating, we're baking, whatever it is that we're doing. So people kind of take a step back. If they've had their homes on the market and they didn't sell, they will sometimes take them off. If they're thinking about selling, they'll wait until after the holidays.
Yeah. And the other interesting thing too is the inventory level. Last month I think it was 2,300.
Last month it was 24 and change. This past month it was 2,088. So it's gone down 300 and change, almost 400. So that's very typical for this time of year, like I said, because people are just taking a step back from trying to sell their homes and focusing on the holidays and that sort of thing. So the really interesting thing about that is not only did we have a decrease in the inventory, but we had an increase in list prices.
Yep.
So list prices have gone up 2.5% month over month. So that means that a home that maybe you were looking at was maybe $450,000 a month ago, and now it's $10,000 more.
Yeah. So we've got this graph here, median list price. You can see the two lines. One is the 7-day average, one's the 90-day average. And you can see the trend. It's still climbing. Part of the reason it's climbing when it usually doesn't climb this time of year is because of the lack of inventory.
Right.
And there's still a high demand. There's still agents complaining that they've put in a bunch of offers and there were multiple offers. As a matter of fact, I saw a Facebook post where somebody complained that there were like 10 offers all over list price, and then the seller decided they were going to pull the house off the market. And after the agents had gone through all this work to submit offers and stuff, like nobody got the house. So median list price is something that we track. Remember, it's list price. It's not the actual sale price. And it's just the median, but we track it because it tends to be forward looking.
Right.
Yeah.
So remember, list prices are usually a harbinger of things to come. So when list prices are going up, so a house will come on the market for $450,000, and then you see it on the market again, instead of having a price reduction, which is what we normally would expect, it has a price increase. That tells us that the market is going up.
The median days on the market is 35. That's median, half or more than that, half or less. But that's still historically really low.
It is.
It's normally 60 to 90 days, and if you're overpriced, it's, it could be on the market for, when we started doing real estate almost 20 years ago, it was not uncommon that listings would expire.
Right. Because
sellers would have like a really high list price, and then they wouldn't do price reductions, and they were hoping the market would catch them and it wouldn't do it, and then they would, then another agent would come along and take the listing, and many times we were the second agent to list the property from some other agent that didn't sell it. Price per square foot is another chart that we've got here to show you. Price per square foot, as you can see, is still climbing. This is the actual price per square foot of sales. The reason why we use this, not median price, is because median price can be skewed if like a bunch of condos sell, or a bunch of townhomes, or a bunch of luxury homes. It can change the number. This tends to be smoother, and you can see this is a pretty nice increase here. Median is $240 bucks a foot median.
It's a good bit of money.
Yeah, that's historically, I think that's the highest it's ever been.
I wouldn't doubt it.
There are some things though causing this. What about lack of building? and people moving here.
Right. So we have a couple things happening here in Las Vegas. If you've driven into Las Vegas or flown in, you see that there is desert land all around us. And you're thinking, well, they can build from now until forever. Well, yes and no. Yes, there is land all around us, but that land is owned by the Bureau of Land Management, also known as the federal government. And they are the ones who sell the land to builders for them to build on it. For reasons that we're not going to go into this video, the federal government has not been selling land to the builders for the last couple of years, so the builders simply do not have land on which to build. So if they cannot build, then we don't have an increase in inventory, but we are continuing to have an increase in people moving to Las Vegas. And people need somewhere to live. So when people need somewhere to live, and there's insufficient inventory, that places pressure both on homes to be purchased and homes to be rented. And that's causing us to have increases in rent prices and home prices.
Yeah. Historically, we get land released on a pretty even basis, but it hasn't happened. And part of the reason it hasn't happened was because the new home builders have been very skeptical to build homes in Las Vegas, given what happened a decade plus ago. They got burned. So they don't want to get burned again. So they've been more conservative all across the country. We're about 3.5 million homes short of where we should be, which is part of the reason home prices are going up. Just supply and demand. It's market economics. You have a low supply, it pushes the supply curve shifts and the equilibrium price. We are in equilibrium. This is not a disequilibrium problem. This is the equilibrium. There's demand. The next slide here, inventory. We did talk about inventory, but this kind of gives you graphical representation. If you look back, now the dots, if you look at the dots, that's the dot all the way on the right is us today. And then the next dot to the left is a year ago, and then the next dot to the left is a year before that. You can see the trend of inventory declining. And something that's interesting is two things drive the decline overall. One is people moving here and not leaving. We're seeing that trend. The other thing is investors.
Right.
Because investors tend to hold houses.
Right, and especially in today's climate, people are looking to invest in something that will be a hedge against inflation, and certainly real estate is part of that strategy. So we do see investors purchasing homes, particularly if they're leaving higher priced areas and they can purchase multiple homes from the sale of just one in a different area, and that is putting pressure on our inventory, and of course that's taking away homes from end users such as owner occupants, but it is also helping with creating inventory for the rental market.
Yeah, and so we're going to go to the market segment chart here. This is really cool. So there's 4 market segments. The top, and you'll see it says market segments, and then it has median price. And those are the quarters. So the top quarter, second quarter, third quarter, bottom quarter of all the houses on the market. And you can see the median price for the top quarter is 1.2 million. Unheard of.
Right.
Given that in 2009, if you broke the market into tenths, 310 was the bottom of the top tenth, which meant only 10% of all homes in the valley sold over 310,000. I think we actually have a video of this from like 2009 or something that you can watch. Our videos go back that far, over 10 years. So you can go find that video and watch it and see what we're talking about. And it's amazing to watch those old videos and then watch the videos now where the market's changed. And then the other incredible thing here is the bottom quarter median is 350, because the median was 350 a year or two ago. The middle of the market. Now that's the middle of the bottom quarter of the market.
Yeah.
The other interesting thing about this is we said that the days on the market was 35, but if you look at the bottom 3 quarters, it's 21 to 35, and then it's only 63 for the top quarter.
Right. So that means that $1 million homes are selling in a couple of months. So that's, again, that supports what we see, that people from other markets who see Las Vegas as a bargain, who maybe had a 2-bedroom, no bath somewhere else for $1 million, can get something pretty amazing here for $1 million.
Yeah, super, super nice. So let's talk about beginning of the year. I made a video and I predicted that there was no housing bubble. I flat out said it. There was no housing bubble, and there were a bunch of people. And the reason I made the video is because I saw the videos of people predicting the housing market was inflated, it was going to crash, there was a bubble, and they were all wrong.
They were, but you know, a lot of those videos are clickbait. I don't know that they mean it as much as they simply want to put something that's scary out there for people to watch. Yeah,
I think that's what they did. They have a lot of views. They monetize their channel, so they just get money from the clickbait and misinforming people. If you still follow those people, go find them and then unsubscribe from their channel so you don't have to watch any of their wrong videos. Most of those people haven't actually sold houses, or they did. It was a long time ago. They're out of touch with what's really going on in the market and economics and real estate. So, but our channel you should subscribe to for sure. Let's talk about prediction then, since I was right last year ahead of all the people who were wrong. So, Oana, what's your prediction for the next 12 months as far as maybe price appreciation or what's going to happen in the market?
Okay. So I predict that the people watching this video are going to share this video with their friends, family, coworkers, so they will see how smart you are, that you were listening to the people who actually know what's going on. That's my first prediction.
All right.
Okay. So my next prediction is that we are going to see continued price appreciation both in the purchase area of the market and in rents. I don't think that there's anything particularly hideous on the horizon. I think that demand will continue. I think interest rates are still low. I think the federal government is behind that as far as continuing to support the housing market by increasing the amount that people can borrow on an FHA loan and on a conventional loan, which means that they also see a lot of price increases going forward. So they want to be able to support the real estate market by providing loans for people to be able to purchase homes.
Yeah, we're going to do a whole nother video on loans and how that is affecting real estate. Maybe we'll even get a loan officer, do it with a loan officer. Yes. I predict the market's going to continue to increase. This low inventory is not going to go away. Despite what you saw, there are not a bunch of foreclosures that are getting ready to happen, right? That was all BS.
Right.
We have a whole video on that where we went through the daily numbers of how many foreclosures. I predict the rents are going to continue to increase. The influx of people here, as well as the number of investors who have come to buy rental properties, the lack of home building, they are all market forces. There is no actual, other than looking at a chart and seeing prices going up, you can't just say, oh, that's inflated, and point at it. And say, I remember once prices went up and went down, so it's going to happen again. That's a bad way to look at, because market economics don't work. They don't care that the price went up. There's an equilibrium, right? So I predict that the prices are going to keep going up. And for those of you who say, well, real estate agents, you guys always say prices are going to go up and whatever. Well, we put our money behind our mouth because we did very recently, purchase a rental home. And we wouldn't have dropped the money to purchase a rental home if we thought market was going to tank, right?
Right.
And we also thought it was a good hedge against inflation.
Right.
And that rents were going to increase. And it was a good investment. And something else is if you think we're wrong and you say, you know what, the market's overbought and you know it's going to tank, and you decide you want to sell your Las Vegas house, give us a call. We will take care of it.
Absolutely.
We will hook you up. We will get your home sold for you. And you can go to be a renter. You can move somewhere else where you can wait it out a couple years and try to buy. We did get approached in Costco. Oana actually did, by some people who watched the video. And they said, hey, and they asked the question, we probably get that quiz question all the time. Is now a good time to buy? Should I wait?
Right. And I actually got an email to that effect too. And our answer is, at this point, the same to both questions from the people in Costco and the email that I got. I don't know what the future will bring long term, but I do know that right now it makes sense to be involved in real estate. Prices are going up. Rents are going up. So for the same amount of money that you're paying in rent, or maybe even less money, you can be a homeowner, build equity, get some tax breaks. To me, it makes more sense to be a homeowner than to be a tenant. Obviously, your situation is something that you have to look at and see what makes sense for you. But in general, I think that makes the most sense.
All the people we know in real estate, all the investors, have any of our investors sold a house because they had to?
No.
Nobody has sold a house. The only people that have sold houses have been relocation. They've moved, right? Out of town, death, like they died and then family sold the house to get the money because they didn't want to deal with a rental.
Right.
Or they left, they like retired and moved, or they got a job, military job transfer and left.
Right.
Some military people even job transfer left, but get the house as like keep the house as a rental. But
right.
We're not seeing anybody selling because they think the market's going to fall. And this includes real estate agent people we know that know the market.
Right. Yeah, I mean, you're absolutely right. The only people that we've seen sell homes are people who are moving, whether they're moving within the area or out of the area or to someplace else, to a higher realm. But that's all I've really seen is people who are moving.
Yeah, you know that we're telling the truth when we're telling you, don't sell the house, okay? Now that's not investment advice. If you think you need to sell your house, then sell your house. But anyway, okay, so bullish for next year. We'll do another video in a month. We'll cover all the same numbers. The key thing we're looking for again is inventory to climb. Until inventory starts substantially increasing over a long period of time, we're not worried about what's going on in the real estate market. And the shift of wealth from investment firms into real estate has really affected the real estate market because they're not going out and buying, securities and bonds and things in the stock market. I mean, they are, but they're definitely coming into real estate.
Right. And the good thing about that is they are supporting the real estate market because they are supporting prices. They are providing stability, which is good.
Yeah, and I think they'll be good long-term assets. Great hedge against inflation, which I think is the number one reason that they're all doing it. Okay, next month we'll do another market update. Until then, subscribe, notification bell, share the video, and leave us a comment or a couple comments on what you predict is going to happen with the real estate market. Or if you have an idea for a video you want us to do, just let us know.
All right, so hit the thumbs up, and we'll see you on the next video.
All right.
Bye.
Bye.